Oh my god, NIO is tanking 10%, we've got dilution incoming, what the hell? So now that we've talked what dilution means and also how you can rate it as an investor, I also want to prepare you for the frank news that I do think NIO will have to raise actually more capital that way, $50 million. And this also may mean that if in case that the stock price is rallying on that news, NIO may actually in the future also consider once again of raising more US dollars in cash, because remember, NIO still has to pay further tranches, although there are smaller tranches, into the NIO China entity when the new investments coming in also from the new investors. So this is part of the deal, this is how it's going to be, and of course NIO will also need some more working capital in US dollars in the NIO ADR that we are invested in. This is not a additional offering, however I also want to prepare you for a little bit of bad news, because I do think there is more dilution to be expected from NIO. I mentioned it in my valuation videos previously. I mentioned also that I don't think it's necessarily a bad thing, so something you need to take in the consideration of investing in NIO, that you will be at some point diluted as a shareholder. Similar things happen to Tesla. I think this is just how growth companies are working, and you need to consider it with your valuation and your price targets. So well, I think the viewers of my videos should be warned about what has happened today, and well, let's dive into it anyways. What does it mean with the dilution today, and also why the stock is tanking, but ultimately what does it mean for you as a NIO shareholder? So as of yesterday evening, after the closing of the markets, NIO announced a new additional offering of shares of 75 million to be exact, and pricing it at $24.44. So pretty high pricing here, pretty good actually. And now what does it mean actually? So coming back to my dilution Excel sheet, which I actually used in my video last time when I made a video exactly at the same topic about NIO dilution. That was actually with the first pre-Hefei funding cash raise, when actually NIO raised some more cash in order to actually pay their parts into the Hefei, into the new entity, the new NIO China entity, part of the deal. And back then we diluted by roughly 9% as shareholders, raising actually $428 million US dollars at the share price of back then $5.95 with 72 million additional shares. And as just outlined in the introduction video, this is just partly how growth companies work, offering new shares, diluting existing shareholders in order to raise capital and cash for funding growth. So back then, and actually at my valuation videos, which I also link once again, I mentioned that I expect NIO to further dilute shareholders. Actually, if you look into my funding document, you will see that I consider that NIO is raising a total of $2 billion US dollars until they become profitable and they don't need to raise any money anymore, and raising it at an average of $10 US dollars a share. So today's raise is actually significantly higher here, and they're raising 1.5 billion by that. As you can see here, we're now at 1,055 million outstanding shares, now offering 75 million new shares. So that is roughly a dilution of 7%, and at the share price of $20.44, that gives them 1.5 billion US dollars in a cash raise, and puts it to 1,130 million shares, outstanding shares for NIO. So this is totally in line with what I was expecting in my valuation video about NIO. Actually, there is still some more room for more additional dilution, but now let's talk about it, why NIO is actually doing that, and what does it mean for you as a shareholder. And to do that, I prepared a little visual presentation of what I think is happening here. So this is Li Bin on the left-hand side. He's the CEO and founder of NIO, and in the middle you see NIO, the ADR, so the American listed company that you as NIO Gang has invested as shareholders. You're buying the shares of the NIO ADR that is US listed. And Well, a couple of months ago, before we got the Hefei government deal, that company, had only 150 million US dollars cash left in the bank. That was at the end of Q4 of 2019. And Li Bin, as a founder of this company, he's roughly owning 13% of this company. And back at that time, he was actually giving 100 million US dollars of his personal wealth in cash into this company, additionally raising more convertible bonds in order to keep NIO ADR at the float. Otherwise, NIO was at the verge of bankruptcy back then, so really a bad situation. We were actually in the situation that NIO could have gone out of business at any point in time. Back then, the shares were trading below $3 a share. Look at where we are now. So why are we here? And this is what happened next. This is actually what the Hefei government deal did do to NIO. And basically, NIO founded a new company that is called NIO China, which is a Chinese entity. And NIO ADR, so the US listed enterprise, is actually the holding company of this new company. And it has 75% roughly ownership in this new Chinese entity. And in order to do that, they need more partners here and new investors. And the investor in this case has been the Hefei local government, which was getting less than 25% ownership in this new company, therefore giving this new company 7 billion renminbi in cash injection. And this is renminbi, so the Chinese currency. This is important to know because this is a Chinese entity. This cannot hold US dollars. This entity is fully funded by Chinese money here. And in order to do this deal, NIO had to transfer both their assets of the company from the NIO ADR plus 600 million in US dollar in cash to this new entity, and then this new entity in total has 11.2 billion renminbi in cash coming from both the Hefei government as well as the NIO ADR. And this company, as I mentioned before, is majority owned by the ADR, and this means owned by Li Bin and you as US and international shareholders. So now, why did the first raise happen? You see that NIO just had 150 million US dollars cash in the banks, and they have 600 million US dollars in cash that they need to transfer to this new entity. So not enough money to actually make this transition. And as outlined in my previous video, this has to be done in different steps, in different tranches. So let's go back to the Excel sheet. There is tranche 1 to 5, and NIO possibly paid already 2 tranches into this new company. So with around 182 million US dollars each, and the next tranche would be in September. So this is why I always said in my previous video that it's quite likely that NIO will actually raise more capital, because this entity here needs more capital in order to actually fulfill those tranches into NIO China. Plus, in addition, they need working capital, which means they need US dollars to pay, for instance, for the German entity, for the UK entity, and for the US entity where they have employees and they are paid in euros and US dollars and so on. And also, if NIO wants to go global, they need US dollars in funding and not RMB cash, which can be used for paying the operations in China, for paying the production, for paying the expansions locally, for paying marketing in China. But it's not well used for paying in US dollars, because it's really hard to transfer cash from RMB into US dollars. This is just how the situation is. So this is exactly why the first cash raise happened with the 430 million US dollars roughly. NIO had enough US dollars in the banks to make the first payments of the first tranches and to spend a little money on working capital there. And with this first dilution already, Li Bin as a shareholder was diluted -9%, and we as NIO shareholders were also diluted by -9%. However, what happened afterwards is that the new prospects of NIO have been largely recognized by the markets, and we had this recent run up of the share price, because because NIO is recovering. It's on the verge of profitability. The market demand has picked up, and most of the analysts are recognizing that, and the bank analysts are now having higher share price targets for the company, so the stock price is keeping increasing there. So now this is the interesting bit about this second raise today. That actually, first of all, you need to think about Li Bin. He's an entrepreneur, he's an individual, he's a billionaire, he wants to own as much as possible of this company, of the NIO ADR. So he is actually in the same boat with us because he is largely a NIO ADR shareholder, and most of his personal wealth actually depends on what is happening to this entity here. And as mentioned before, during the bad times, he put more of his personal money into that company. And with this second raise, I think partly one of the reasons why he is doing this is that he wants some part back of his company. He wants to increase the ownership in NIO China and actually decreasing the ownership of the minority stakeholder. And that's exactly what's been written in the press release about this offering. The company plans to use these net proceeds from ADS offering mainly to increase the share capital of and the company's ownership in NIO China, to repurchase the equity interest held in certain minority shareholders of China. So you need to think from Li Bin's perspective. He wants back his ownership in this company, and he is buying back the shares of NIO China, which was clear from the beginning, actually, if you read the details, that NIO, as the US listed company, has this option of buying back the company. Now, the timing of that is interesting because now the stock price has run up. However, NIO is not still profitable yet. So what does it mean? Actually, with now increasing the ownership in this company, that means if we get future revenues, future profits actually, instead of only previously getting 75% of those profits, because you have to split them with the Hefei local government, which was providing here the cash injection, now possibly maybe up to 95% of those profits belong to Li Bin and the NIO gang. Well, I don't know if it's going to be 95% because NIO is not outlining how much ownership they're buying back into in NIO China. However, we can see it as a view of actually looking into the future and seeing that, well, this company is probably going to print billions in profits in the future. So I want a larger stake of this, and I only gave you some ownership during these bad times because I actually had to, because otherwise I would have never had a chance to get to those profits. So this is probably the thinking behind of Li Bin, why he is doing the cash raise here. And because he is now sitting in the same boat with us, you can see that this is not necessarily a bad thing, although we are now getting more dilution, -7%. So of course the shares are tanking and our shares are now worth less in the company temporary. However, as I outlined before, this should have, in let's say 5 years time, this should have possible implications on both the valuation on NIO and at the same time our stakes in this company as early investors. Now then, there's also other reasons why the cash raise has been done, which is investing in research and development, as well as in autonomous driving technologies and global market development. So this is exactly what I have been saying before. They need the US dollars in order to pay for their working capital in the overseas entities. So the research and development is possibly mostly done in Germany, in the Munich office. Then the autonomous development is actually happening in California, in the San Jose entity, and then they're talking here about global market development, and we recently heard the news that NIO wants to go global in the second half of 2021. So this is the preparation of getting the wallet filled with US dollars in order to spend it overseas. And now the only question is how much of the money are they going to keep in US dollars in order to spend it on the global expansion and also on funding the working capital, and how much of the US dollars they're actually spending in buying back the NIO China entity here in order to increase the possible reaps and benefits of profitability in the future for current shareholders. So if you look at the big picture, just a couple of months ago, the NIO ADR was almost bankrupt. We were at a $3 billion valuation, and now we are roughly trading at the $19 billion valuation with the NIO ADR that has roughly $300 million in cash, or maybe they keep another $500 million in cash from the current raise, and possibly they spend up to $1 billion in buying back the assets from NIO China entity here. I don't know how big the split is going to be. Possibly they can even buy back everything. I don't think they're going to do that, because actually they also want those partners. They want the local government to be partner in that entity, because all of the things that are happening in NIO China are quite interesting as well. So they can now fund all of the operations with the CNY cash funds. They can now fund all the battery as a service with the bank loans of the Chinese banks and stuff like that. This wouldn't have been possible without the local government, to be really clear on that. However, I mean, like the short sellers and the NIO bears, they will spin that into bad news about the diluting shareholders' equities. When the Chinese government went in, they said like, oh, well, this is bad news because now we have the Chinese government in this company, and nobody wants the government in this company and stuff like that. However, I'm just having a more pragmatic view on that, and just aligning my thoughts with how Li Bin is thinking about it. And you can clearly see that yes, there are clearly benefits of having the Chinese local government being a part of NIO China here. At the same time, Li Bin, he's an entrepreneur. He doesn't want to depend on the government, to be clear. And he's telling you this by actually now starting to buy out the Chinese government from the entity. And I was actually thinking that this could actually happen at a later stage, to be honest, when NIO gets profitable, that they may actually even do an IPO at the Chinese star market, so the Chinese stock exchange, which actually has higher listing barriers. For instance, they need to be profitable at that point in time. And I thought then they might actually going to buy back some aspects of the companies. But now actually with this race, with this big race right now, that may actually be a better timing even for current shareholders, because well, if they're going to do it in a couple of years, those assets will be more expensive to buy them back. And so now that could actually be kind of a bargain for Li Bin as well as us for shareholders. Now, I don't want to paint this entirely into positive news. Of course, dilution isn't the best thing to have. Of course, I would rather not like to be diluted as a shareholder, but as I mentioned in my previous videos, this is to be expected. This is the deal that you are getting if you're buying into a growth company, into a startup that hasn't reached profitability yet. This is just how it works. This is how it worked for Tesla as well. But to pay also some respect to the bear thesis here, with all this juggling around of the assets and risk aligned to that, I'm not saying that this is entirely risk-free. So for instance, now that we're actually having the NIO entity as a holding, having to buy back the assets which they previously owned is of course not ideal, but this has just to do with the situation that NIO was almost bankrupt. So there is no other way around it. If this wouldn't have happened, NIO wouldn't be existing today. So all those negative effects of dilution and so on are just having to do with the fact that actually NIO isn't as profitable as fast as they possibly wanted it to be in the beginning. And if you are investing in a startup, in a young company like that, then you just need to pay attention to those kind of risks. And another reason, of course, like always before, if you invest into a Chinese company, you need to be aware that you are just investing into this NIO ADR, which is essentially a holding company in the Cayman Islands. Well, yeah, they have an ownership in the NIO China entity, but in a worst case scenario, what could that mean? What could happen? Do you really have the legal means to sue somebody in China if they kind of, doing some bad stuff with your ADR? This is possibly one of the biggest risks in investing in Chinese companies in general. But you just need to know that. This is also why Chinese stocks are usually trading at a discount in comparison to the Western peers. So I'm willing to take that risk. I know exactly what it means. You should be aware of that too. So not everything is positive about that. However, in general, yeah, as you can see here, I'm not really worried about this current dilution. I'm actually much more excited about that. It's now another 1.5 billion US dollars in cash, tremendously increasing actually the quality of the balance sheet of NIO right now, and putting them in a much better position and actually funding the growth for the next couple of months to come. So I think actually that the pullback in the share price, that will be short-lived, because there will be so much more news coming out with the growth of NIO that, well, it will possibly make back this decline in the share price pretty soon. So yeah, these are my views. This is not investment advice. This is just what I am personally thinking about it. And I hope you enjoyed this information. If so, please subscribe to the channel, because currently I'm pumping out a video every other day. So maybe if you don't get a notification, hit that notification button so that you, whenever I post a new video, you definitely get it into your start page here at YouTube. And yeah, thank you guys for watching, and see you in the next one.